Hi gang, we are here. Another week has passed us in the mortgage business. I'm your host for our show, 6th episode, What's the Mortgage Deal? I'm Josh Thielen. We're here to talk interest rates, the mortgage market, the climate for 2018 as far as rates are concerned, and also the mortgage pre-approval process. What you're pre-approved for by your loan officer or your lender might not actually be what you can afford as an individual or a family. So we're going to touch on that as well today. So let's start off. Mortgage interest rates. 9th consecutive week that mortgage interest rates have ticked up. February 5th, we have a new Fed chairman. Jerome Powell has been sworn in by the Trump administration. Janet Yellen did not get to her second term. She was replaced by Powell. He has talked about rising interest rates. The experts are predicting anywhere between 3/8 and a half a point to the average 30-year mortgage note for 2018, which is a considerable increase. Mortgage rates right now are in the 4s or low 5s, depending on your product, of course, and whether or not it's owner-occupied, non-owner-occupied. They can be a little higher for non-owners. But typically speaking, a single-family residence with conventional FHA, USDA, VA loans, your rate's going to be somewhere in the 4s or low 5s right now. So by the end of the year, we foresee the rates actually being for certain in the 5s, most likely for the majority of loan programs. So again, the mortgage rates are based on the 10-year Treasury note. These are fixed income products. Mortgage notes that are packaged and sold to the secondary market typically are kept for 7 to 10 years, and then that person typically will refinance. So what does that mean? The 10-year Treasury yield is the instrument that is watched most closely by mortgage professionals. So as that Treasury yield ticks up and gets higher, if people are paid out more on that yield, then interest rates will rise for mortgages. They're basically going after the same type of investor, that safe, secure 7 to 10 year investor that's looking for a return on his money. They may invest in Treasury notes or bonds, or they may invest in mortgages. So mortgages are slightly riskier than a Treasury yield. The Treasury yield and bond, the Treasury bonds or notes, those are the safest investments because they're backed by the United States government. Well, technically they are. So mortgage rates are a little higher than those yields because they're a riskier product. So investors are paid out more on those products. Again, going back 46 years, from 1971 to today, the average mortgage rate's 8.5%. So I actually added up each year, divided by 46, and you get 8.5. So if you're still in the 5s, you're absolutely fine. You still have a great mortgage opportunity. Payments and rates are still really low. Okay, so that summarized that. Now, on to the pre-approval process. What you're qualifying for, based on what your loan officer and lender tells you, may not be truly what you can afford as an individual or family, okay? So we have our guidelines and restrictions, and your debt-to-income ratio can go up to 50 or 55%, depending on the program. Of course, USDA and VA is closer to 41, but that may yield you a $1,400 mortgage payment. You might be paying $900 for rent now. That's an extra $500 a month. You might think no problem. But what I suggest is this. Take 6 months, talk to your loan officer and your lender, figure out what approximate mortgage payment would be with your principal and interest, your taxes and your insurance and your MI. Add that up, and for 6 months, go ahead and make that payment to yourself. So pay your rent, and whatever your mortgage payment would approximately be, take those funds and put them into a savings account. That's going to help you 2 ways. It's going to help you solidify the fact that you know you can afford that mortgage, and then rolling into our next and final section and our feature we're going to talk about today is the unforeseen expenses when purchasing a house. So this is a few items that people often don't think about and aren't told about by their loan officer, or maybe people have selective hearing and they're not necessarily listening because they're thinking down payment and closing costs. Well, there's also 3 or 4 things that are very important to keep in mind when you're purchasing a house. Those are inspections and appraisals. So inspections can run from $395 on a single family and up for a multifamily. The inspection is done for the buyer's purpose, really. The inspection is not something that's needed by us, the lender or the loan officer. That's done for your edification. Make sure the driveway is in good condition. There's no cracks in the foundation. The heating and cooling systems work. Electricity works good. It's really a separate item from an appraisal, which is our next item. But that's something a buyer will need 98% of the time when they're buying a home. So the next expense is the appraisal. Now appraisals run from $450 and up. Multifamilies or more. So that's almost $1,000 right there that you can use those extra funds that you've saved in the savings to pay for. A third thing that people often forget about is homeowners insurance or fire protection. Homeowners insurance is an insurance that's paid on your house that often is escrowed, but you need to pay 1 year upfront prior to closing. So in case something happens before that escrow payment's made and that insurance company's paid, if anything happens to the house, like a fire, the insurance company covers that borrower. So a year is asked for upfront before closing. So homeowners insurance can run from $500 up to $2,000. So I'll put $1,500, depending on the size of the property, size of the mortgage that you are insuring. So again, you have these extra funds. Say it's $500 for 6 months. That's $3,000 you'd have set aside. That easily covers your inspection, your appraisal, and your homeowner's insurance out of pocket. Fantastic. I hope this was helpful today. I appreciate you guys following me, checking me out. Here's my Twitter handle. Also, you can follow me on Facebook. My cell phone's also listed here. Feel free to text or call anytime. Have a grateful weekend. And again, appreciate you checking me out. Thank you.